About 90 points higher on the index.
This morning, there is broad-based buying across key sectors.
For the markets looking good, Midcap index has also picked up some pace. So the Nifty sitting with gains of 114 points. It's been quite range-bound.
So the number is 19,726, some distance away, but we need a close above it eventually. We're going to end like we opened. I mean, 100 points higher is how we started. We end up 100 points here on the Nifty, 19,541.
Hello and welcome to Markets Today. I'm Sonal Bhutra and here are the top market headlines for the day. Positive global cues lift Dalal Street. Sensex gains over 400 points. Nifty gains over 100 points. Bank stocks rise but mid-caps underperform and the index ends marginally in the red. Crude oil prices see a sharp fall. Fears over demand offset pledges from Saudi Arabia and Russia to continue the production cuts. Brent crude prices trade near $85 a barrel. Marico slips on weak Q2 growth. IEX gains on reporting strong volumes in September, while PNB slides on the weakest loan growth in 5 quarters. Naveen Fluorine also takes a beating after the managing director's resignation prompts bearish brokerage calls, while bullish brokerage commentary ahead of the Cricket World Cup helps Zomato extend gains. Morgan Stanley expects the QSR stock to outperform over the next 2 months. Bata gains after it forayed into athleisure category. Reserve Bank to announce its monetary policy decision tomorrow. All respondents to a CNBC-TV18 poll vote for a status quo policy. However, the market would be keeping an eye on the commentary and inflation forecast going forward. And with that, let's go straight to the day's market action now. Positive global cues lifted Dalal Street. Sensex and Nifty ended with gains of close to 0.5%. L&T, ICICI Bank and Infosys lent support, while Reliance was a major drag. Midcap underperformed to end mildly lower, while Nifty Bank rose in line with the blue chips. Prashant Nair joins in with a wrap of all the action. Prashant.
Well, there was finally relief when we came into a trade this morning. Yields were lower in the US, dollar index sold off, and oil actually sold off the most, 5% crash in oil prices. So it was a constructive backdrop, especially after the market, both the Nifty, the Bank Nifty, having sold off coming into this one. So we started higher. The Nifty started with a 100-point gain, built on it mid-session, but we ended about 100 points. So in a similar way, how we started. Nifty Bank was up 1% at one point in the day today. It ended with a 0.5% gain. So there was a little bit of a sort of give up which happened. Mid-caps were absolutely flat. The small-cap index on your screen ending with about a 0.5% odd gain. What did well? Large caps first, as always, autos. So you had Bajaj, Mahindra & Mahindra and Maruti, which stood out. There was Titan and TCS, and there was a L&T. L&T, of course, has been a very good performer over the last 2 months now, actually. In the broader market, some sort of losers, some gainers, but long list of volume-led gainers. And I think that is what makes it a good market for the broader space. So Zomato, big gains. Utkarsh Small Finance Bank started higher, ends with a 17% pop. RR Kabul, which is a recent listing, did well. Angel One, Shipping Corporation of India. There was Sirma, which is the sort of EMS company. Prestige, Sobha, real estate companies have been doing well lately. Nazara Tech, E-Clerks, Shakti Pumps is back above 900 rupees. EMS Limited, there's SIS, Gabriel India, Wonderla. Again, a recent listing called Zaggle, which continues to do very, very well. So as you can see, a diverse set of big volume-led gainers is what we had. Losses coming through in names, much shorter list when you especially put volumes along with price change. PNB was down. Naveen Fluorine continues to sell off. Union Bank, RBL Bank, Mapma India, which has been a huge outperformer, and Marico, where there was a pre-quarterly update and there was a bit of a weakness, the stock ending lower. We need more of what we saw from the US market. Yields need to stay behaved and dollar needs to be lower as well. And I think that's the combination one hopes we get when we come back tomorrow.
Thank you, Prashant, for that analysis. It's time to get you some market opinion now. Sanjeev Prasad, MD and co-head of Kotak Institutional Equities, says the market is seeing a significant movement within the mid-cap and small-cap space. He also believes that the chemical sector is facing a lot of headwinds.
So about 40% of the Nifty 50 hasn't done anything for the last 2 years now. And some of the stocks have actually not done anything for the last 3 years, come to think of it. Whereas you are seeing this big party, in the mid-cap and small-cap space. Some of it is, driven by a lot of incremental spending by the government in the investment sector, so some of it justified. But I suspect in many cases, the narrative is far ahead of the fundamentals. As of now, the sector is facing a lot of headwinds, namely two. One is really a global slowdown, which is resulting in volumes getting impacted. And you also have a temporary problem of very high inventory with the customers. So that affected volumes in 1Q FY24 that could sustain into the second quarter also. The bigger issue as of now seems to be industry profitability. That's gone down significantly, although of late you have started to see some improvement. Long-term fundamentals still look good of the sector.
Okay, that is Kotak Institutional Equities on the chemical space. Moving on with that to the second headline now. Crude oil prices have seen a sharp fall. This as fears over demand offset pledges from Saudi Arabia and Russia to continue the production cuts. Brent crude prices trade near $85 a barrel. Manisha Gupta joins in with a wrap. Manisha, what are your takeaways?
Well, it has been a sharp decline for the crude oil prices, 5% overnight, and we haven't been able to hold on or settle in the day-to-day as well. We are trading at a one-month lows, and with the overnight decline, it's an 8% of a fall for the week itself. Well, the crude prices were overbought. The hedge fund holdings have been at the highest in 3 years, and we've seen a 28% of gain in the previous quarter. So some profit taking was in the coming. Add to that, the fundamental factors as well seem to have turned around. So to begin with, the EIA report suggests that the gasoline inventories in US have been rising, and they are at a 2-year high, suggesting that the demand in US seems to be coming down. Apart from that, markets also did see the gasoline prices trade at a 9-month lows. We've seen 17% decline in 3 weeks come in for this one. The heating oil prices also fell 5% in the overnight markets. The street also saw that the OPEC and allies, while they met on 4th of October, that is yesterday, but made no changes or any market-moving statements for that matter. The US crude stocks, while have seen a decline, but the markets do believe that the production from US has been on a rise here as well. The Cushing stocks have been increasing. The data in the meanwhile from the major consumer countries, whether it's been about China, India demand has been on a decline. We've seen European Union data come in on the weaker side as well. So the weak economic data, the strong US dollar index also weighed onto the crude oil prices, with markets now believing that for the very near term, it is going to be between $80 to $87 a barrel that the crude oil prices could be trading within.
Manisha, thank you so much for joining us with that update from the commodity space. Moving on to the third headline now. Marico slipped over 4.5% as the company predicts lower revenue and volume growth in its second quarter business update. However, it expects robust gross margin expansion. Manglam Malu joins in with the details. Manglam.
Well, Marico's second quarter update was rather soft on the top line account. In fact, the company said that their overall revenue declined in low single digits, and this with a volume growth of just low single digits as well. Why is that? Because demand conditions didn't change much in the second quarter as compared to the first quarter. While they're hopeful of this, demand recovering and business recovering in the second half of this year, it'll be important to see where it goes from here. However, no problems on the operational front. There was a sharp expansion in their gross margins. The company's reiterated their 20% EBITDA margin guidance for the year as well. And for the second quarter, their operating profit has actually seen an improvement in double digits itself. So that is something that the street, is choosing to ignore, because that was already in the price. Remember, a couple of days ago as well, Marico saw a bit of an uptick, largely on account of an upgrade coming in from ICICI Securities, and that was also penciling in higher margin expansion. So the margin expansion piece was in the price. Low top line growth and low single digit volume growth coming in is something that the street did not like, as a result of which the stock was lower.
Manglam, thank you so much for joining us with all those updates. But it's raining second quarter updates. RBL Bank and PNB Bank slipped in trade. This despite RBL Bank showing healthy business growth and PNB Bank's advances growing in the second quarter. Abhishek Kothari is standing by with the analysis and details. Abhishek.
Well, for RBL Bank, their Q2 FY24 business numbers did show that the growth was healthy on a sequential basis or quarter-on-quarter basis. Deposit growth was 13% YOY and about 4.8% sequentially. The CASA, or the low-cost deposit in absolute value, grew by 11.7% YOY and about 0.5% sequentially. However, the CASA ratio, that's seen a dip when compared to YOY number or even quarter-on-quarter number. Retail deposit traction was really strong, growing at 18.9% YOY and about 4% sequentially. Loan growth was pretty strong, growing at 21% YOY and about 4.6% quarter-on-quarter. So in terms of credit to deposit ratio, that's seen a sharp uptick to about 87.1% when compared to 81.4% in the same quarter last year. And when compared to sequential number, it was a dip of about 20 basis points, suggesting that the net interest margin could see massive improvement on a YOY basis and could remain remains stable on a sequential basis. For Punjab National Bank, the loan growth was on the weaker side, both YOY and quarter-on-quarter. It's perhaps the weakest loan growth that you are seeing in last 5 quarters. However, the net interest margin could surprise positively. Deposit growth was 9.65% YOY and about 0.8% sequentially. The CASA ratio, that's seen an uptick on a sequential basis. So CASA ratio came in at 41.1% when compared to 40.9% in the previous quarter. And the loan growth was at 13.8% YOY and about 3% sequentially. So there was improvement in credit to deposit ratio, which improved to 72.2% when compared to 69.6% in the same quarter last year and about 70.6% in the previous quarter, suggesting that the net interest margin could either improve or remain healthy on a sequential basis. Back to you.
Okay, that is about the financial names, but real estate companies like Sobha and Macrotech developers also reported their Q2 business update. So let's start with Sobha. It was a good set for both of them actually, but for Sobha, it was the highest ever quarterly sales that the company reported. Their share in sales value in this particular quarter, that was up around 33% on a YOY basis, and it was up on a sequential basis as well. Even for their volumes at 1.7 million square feet, it was an uptick of around 20%. The realizations at 10,223 rupees a square feet was higher on a YOY basis, but sequentially it did see some decline around 2.7%. The company says they saw steady performance in Gurgaon. They're capitalizing the established presence as well. In the Kerala market, the first half of FY24 saw sales which were higher than that of FY23, and Gift City, which is a smaller volume game for them right now, did see record bookings as well in the quarter gone by. So good numbers from Sobha. For Macrotech as well, it's the same story. Their pre-sales are up 12% on a YOY basis. Their collections are up 16%. They have been able to reduce their debt as well, both on a YOY and on a quarter-on-quarter basis. So debt stands at 6,730 crore rupees for the company as in this quarter. They said that they've achieved 48% of their FY24 sales guidance. This despite no new launches that came by in the first half. There's strong pipeline in second half with projects at 7 new geographies, and they are on track to meet their FY24 guidance. In terms of business development, they have achieved 80% of their guidance already. 14,300 crore of business development is what they've seen in the first half. So it looks like they'll exceed their business development guidance and will meet their sales value guidance. So good numbers and commentary from both the players. Moving on now, we'll slip into a short break, but when we come back, we'll talk about all the other headlines that we are tracking. Stay tuned. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's talk about the fourth headline that we are tracking. Naveen Fluorine slipped 3.5%. This after company's managing director resigned, and the company held a conference call yesterday, but that did not allay investor concerns at all. So basically, let's start with the news first up. They held a conference call yesterday, and that one spoke about how the current management is able to take care of the projects that are ongoing, and search is also underway for a suitable replacement. They spoke about how ongoing projects will not be impacted during the transition, and they expect to execute current and future transactions positively as well. Customer relationships will also not be impacted, is what the current management said, saying that innovative relationships and future projects are as is. They are, of course, working with human resources. This is what they clarified when asked about top-level attrition, which we have seen in last 2-3 financial years. And additionally, they added that company wants to raise equity. This is in order to fund future projects and ensure capital discipline as well. But all these statements did not allay any investor concerns. In fact, Jefferies went ahead and they spoke about how current circumstances will not allow company to raise equity. They've cut their EBITDA estimates for the company by 13%. This is on slow capex because they think some of the capital expenditure plans, they will see a halt because of the current MD exiting. They have also downgraded the stock to a hold and cut the target price to 3,625 versus 5,475 earlier. Nirmal Bang also has cut the target price to 4,600 versus 5,000 earlier. So the uncertainty around new MD will continue to remain till the time he or she are inducted in this position. The stock could see some more pressure. So that's the idea coming in from most of the brokerages as well. But what did do well was Bata gained 0.5% after it announced its foray into the athleisure clothing category. This product expansion in activewear and athleisure clothing will be under the brand Power. Mangnam Malu joins us now. Mangnam, give us the details.
It's an interesting foray coming in from Bata, where they moved beyond just footwear and getting into apparel wear as well. Remember, back in February itself, the company had given us a slight hint of this foray, and now they've launched their athleisure brand under brand Power itself. You know, the range starts at around 799 odd rupees, so it is affordable, keeping in mind Power and Bata's value proposition. But at the same time, you know, it is a high growth market. Athleisure is growing in upwards of 20% and also is a near $2 billion market as well. So Bata, what it does is it helps Bata leverage the Power brand. It helps them sweat their retail assets better, and also it helps them, you know, encompass the Power brand into other categories using the sports positioning. And it increases realizations. While 799 rupees is the starting range, you know, shoes are selling for a lot lower as far as a large part of their volumes are concerned. So all these things, along with these getting the opportunity to be sold on their website too, will help the company's overall ecosystem. Let's see how it pans out. The street was unperturbed with regards to a stock price move on Bata, but the proof of this athleisure will of course lie in the way it wears.
Okay, that is about Bata, but Mangalam, hold on. There are some brokerage news views coming in. Zomato gained close to 5% on the back of a positive note from Morgan Stanley. The firm said that the company has been profitable on the core business front. There's more about World Cup as well. Mangalam, tell us more.
But as far as Zomato is concerned, you know, it was a big mover in today's trading session, and that was largely on account of a note coming in from Morgan Stanley. It's a tactical buy that they've given. What they've said is that the company is surprised positively as far as the metrics of their core competent or you know, core business is concerned. Importantly, you know, they believe that maybe the second and the third quarter, what they will do is assort some of the investor concerns with regards to stagnating monthly transacting users. The new platform fees have also been well adopted by the ecosystem, as a result of which they have an overweight rating with a 125 rupee target price on the stock.
Okay, 5% higher on Zomato today. Thank you, Mangalam, for joining us with all those details. Moving on to the fifth headline now. Reserve Bank of India will announce its monetary policy decision tomorrow. All respondents to a CNBC-TV18 poll vote for a status quo policy. However, the market would be keeping an eye on the commentary and the inflation forecast. Ritu Singh joins in with the key details and the expectations as well. Ritu.
The Reserve Bank's Monetary Policy Committee is widely expected to keep rates on hold for the fourth consecutive time and strike a hawkish tone with the recent volatility in global crude prices and global central banks setting up for a longish pause. 100% of the respondents to our poll expect a status quo policy this time around. No rate hikes are expected in the entire financial year, and a rate cut could be pushed to the next financial year, with 40% expecting it in the first quarter and another 30% in the second quarter. But really, this is going to depend on how inflation pans out. Now, the MPC is also expected to leave the policy stance unchanged at withdrawal of accommodation, because the last tranche of that 50,000 crores impounded by RBI with the incremental CRR returns to the system in October. Half of our respondents expect the RBI to revise the consumer inflation projection upwards marginally, while the other half expect it to be left unchanged at 5.4%. The GDP forecast is also unlikely to be tinkered with in this policy. And now anything said on liquidity is going to be very closely watched. We asked our respondents where they see the interbank call rate for the rest of the year, and a large majority sees it at 6.5% to 6.75%, which is a tad above the repo rate. This is because dealers say with the US yields giving a near 5% risk-free return, RBI will have to keep short-term rates higher to attract dollar inflows and prevent any speculative outflows. And lastly, the tone of the policy is likely to be quite hawkish, as macroeconomic developments, especially on the global front, will leave little room for RBI to sound dovish. So to sum all of this up, while there's unlikely to be any major action on rates, the commentary is what the markets will watch out for, and more importantly, the inflation projection from the biannual monetary policy report will give an indication of just how far away we are from any hopes of a rate cut.
Okay, you can catch our coverage on the RBI monetary policy all day tomorrow right here on CNBC-TV18. And with that, we'll take your leave on this edition of Markets Today. Stay tuned for more news and updates. Thanks a lot for tuning in.